Well, global markets have shaken off another strong US inflation read to push back into all-time high territory. Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 15th of October 2024, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So the biggest news for the local market has perhaps been the Chinese stimulus announcements. So far, they've actually probably disappointed from what most people have expected. Many people have expected, I've heard a bazooka, a sledgehammer, and many other sort of high impact analogies for, an expected fiscal stimulus announcement. Instead, what we've seen has been more of a spanner, and it's been more in the monetary policy realm with, a reduction in lending rates, a loosening of lending standards, and other actions in the debt market. We haven't actually seen big commitments to fiscal spending from the Chinese government. We haven't seen big spending announcements meant to drive, Chinese consumption. Many people have expected that would be announced over the weekend, and instead we actually got a bit more of a subdued announcement, and now the assumption is that they may announce things in future, but I think people have started to tone down their expectations. Now, despite this, we've seen, Chinese markets hold on to their recent gains. We've seen commodity markets mostly hold on to their recent gains. And for the Australian market, we've seen our iron ore miners hold roughly near their recent highs. I do think there is a bit of risk here because, like I said, expectations have been quite high for, a big amount of fiscal spending. And if that doesn't eventuate, I do think we'll see selling start to creep back into Chinese markets, back into things like iron ore, and perhaps back into the Australian iron ore miners. Regardless though, they appear happy for now to hold near their highs in the expectation that an announcement will come. The other thing to touch on is the US earnings season. It started on Friday night with JP Morgan, Wells Fargo, BlackRock, and a few other large financials report their earnings, and the earnings were really solid. They were better than expected, and each of those companies that I named had a big jump higher on the night. The earnings season is going to continue for the next few weeks, and if Friday was anything to go by, we could expect to see a fairly resilient market through this earnings period. Expectations are very high, and they have to be to justify the current extremely high prices. But if every company reports like they did on Friday, that could be further upside for global shares. So, like I said, markets are back at all-time highs. In some cases, they've pushed through into fresh all-time highs. We saw that for the US S&P 500 over the past few sessions. We saw that for our XJO market today. But really, a lot of risk asset markets are at all-time highs. Gold is at all-time highs. European equity markets are at all-time highs. And that's despite, a lot of potentially negative factors. Like I mentioned at the start, we saw hotter than expected US inflation late last week, and markets pushed to fresh all-time highs regardless. In many of the European countries, they're actually in recession, and their share markets are at all-time highs as well. For our own market, we're teetering on the brink of recession here for Australia, and our market's gone to fresh all-time highs as well. It looks like the global rally in just about everything is pretty unstoppable at the moment. And, I think that's going to be the case for a while yet. We've seen US economic data start to slow, but it's remaining a lot stronger than expected. There have been many forecasts of recession this year, and it doesn't look like it's going to happen this year at all. We're also seeing record amounts of US government spending and, a record amount of US government deficit. And I would say that is probably closer to money printing than, the quantitative easing that we saw coming out of the GFC. So with the US government essentially printing money and pumping money into markets, I think that's an inevitable outcome has been, the rally that we've seen, and potentially further upside. We do have a bit of risk with the upcoming US election, and we do have a bit of a risk with inflation running a bit hotter than expected. We are seeing incredible risk asset price inflation, and if that does start to flow into consumer prices as well, then all these forecast rate cuts that we've had, keep in mind at the start of the year we were expecting 7 US rate cuts in 2024. All those rate cuts are going to be pushed out, and there is a chance potentially of further rate rises. So that's where I'll leave it for this week before we go into the charts. Markets are at all-time highs, and they've been driven higher by, in the US's case, strong earnings, strong government spending, and in our case, mostly following the US. So let's have a quick look at the charts. This is the Australian market, the XJO, and we've seen a fresh all-time high today. We broke through the previous high at roughly 82.80, and we set a new high at roughly 83.30. I would just like to point out that each of the last few peaks, or fresh all-time highs we've pulled back the day or two after. So the previous peak we pulled back immediately, the peak before that we pulled back 2 days after, and the peak before that we pulled back immediately as well. So we will have to keep an eye on that to see whether that happens for our market over the rest of this week. If we do fall from here, the previous high at 82.80 is likely to act as support, and if that breaks, we could see a move back towards 81.50. If we keep rising, very hard to say where we may stall, as we've never been to these levels before, but historically our market has liked round numbers, so 83.50, 8400, something like that. Let's have a quick look at the US S&P 500, and we can see that it doesn't look too dissimilar to our own market. They recently broke through their own all-time high resistance at 57.70 roughly, and they've pushed up to fresh all-time highs overnight. In terms of where they may head to, very hard to say where they may stall, but again, markets do tend to like round numbers, so perhaps 5,900, something along those lines. Should they fall off from here, you've got the previous all-time high at 57.70 likely to act as support, and then you've also got this sort of medium-term uptrend line, which also is roughly around 57.70, which could also act as support. We will see the US earnings season resume tonight, and there will be several large names reporting earnings, I think the biggest of which is United Health. And like I said, if earnings are as strong as they were on Friday, we could see this grind higher continue. So that's it for this week, guys. If you did enjoy the video, please consider subscribing to our channel, and I'll hopefully see you guys next time. Bye for now.